What's up, you guys? All right, so in this video, I'm going to be going over Facebook and why I think Facebook is a buy right now and why I personally just bought Facebook shares. Now, I bet that this isn't the first Facebook video or will be the last that you'll see here on YouTube. So as a precursor, I'd really recommend you check out Sven Carlin's breakdown of why he thinks Facebook is a buy and Michael J's version of why he thinks Facebook is not a buy and why he thinks there's too much risk. Those are two other YouTube channels that really do their work. They really break down stocks effectively, significantly better in my opinion than the majority of content that's out there on social media. And I just really want more people to go to their channels. Anyways, so I have a different approach as to why I think Facebook is a buy right now. So I personally look at Facebook in more of the tech and data light. So for those of you who don't know, I'm currently working as a business analyst. I crunch data for a living and I know how important and vital data is to enterprises now and it's going to be even more important over the next 10 years. Large corporations are only slowly starting to really understand how important being able to mine and target their data towards end users is, and I believe that that industry is going to really ramp up over the next decade. So, taking a step back, looking at Facebook. Facebook is one of the largest companies in the world, and it is one of the strongest and biggest digital advertising companies out there. It only really has a rival of Google in the digital advertising space. Google owns roughly 40% of the market, and Facebook owns between 20 to 25% of the market, depending on the year. And both of those companies moving forward are going to have a lot of inflow revenue from enterprises that aren't even fully on digital platforms yet. Now, let me kind of break down why I think that is. So, there's roughly $230 billion spent in 2017 on advertising that wasn't through a digital platform, or a digital media platform. So that generally, the bulk of that goes to TV with about $80 billion, and then the rest of it gets broken up into magazines, billboards, radio, and just flyers and other things through word of mouth. Now, when you look at this number, and then you look at the amount of people that are on social media on a daily basis, generally, if you put out an ad on, say, Facebook, you can hit thousands and thousands of people instantaneously and have a much higher ROI on your advertising than you can with throwing out a TV commercial and hoping that more and more people view it and that they're just going to go out and buy the product. When you're online and you throw an advertisement on Facebook, one, it's ease of use because the person can click on it and then immediately buy your product. There's no going on the internet, there's no phone. They're currently at the medium that can close that deal for you. And also, people, especially with Instagram, people are turning their ads into what look like stories, and it makes people start to look at them and think that they're another user before they even realize it's an ad. So I really think that the ability to grasp people while they're just scrolling through social media with flashy ads and getting them more enticed is going to become pretty much the norm and where the majority of companies dump all of their money into revenue. And so me doing, some quick maths, if you take, the $230 billion and you're going to give half of that, assuming half of that over the next 10 years becomes digital advertising, and then you're going to give Facebook about 25% of that, you're looking at almost a $50 or so billion increase just to Facebook's net revenue. Now, that is kind of, to me looking at it, it's kind of insane, but at the same time, you have to really think about that. Facebook and Google kind of won this market. They won the social media, and they won the data graphics. There's no company that can hold a candle to the amount of data and the amount of users that Google and Facebook have in this space. And so that's why I think that the majority of the money is going to be funneled back into Facebook and Google as more and more things switch on to, the digital platform. Now that's not the only thing. This is all this is all in the future, and that's what's not priced in the stock right now because no one is banking on, radical shifts in industries. So if you kind of see from Michael's video, he kind of breaks down as to the fundamental analysis as to why Facebook is properly priced or still overly priced based off of future revenue growth. And while that is a completely valid way to invest, and while that is, backed by investors such as Ben Graham and Warren Buffett, and even Sven Carlin, genuine value investors go off of fundamentals because that is certain. So they don't really care as much about like all the opportunity that could go through, because it's a different way to value intrinsic value. Now, I'm more, especially in the tech space, I'm more focused on, the value of opportunity mixed in with a fundamentals background. So if the company is fundamentally sound and they have a large opportunity ahead of them, that is kind of where I lie. So, and again, it's also pretty difficult to find extremely undervalued tech companies. So the fact that that is my favorite industry and my little niche currently, it's pretty hard to find good values from a true value standpoint. I will argue, though, that Facebook kind of makes a case for both arguments. And with that being, so when you look at Facebook's last quarterly earnings, they grew revenues 42% year over year. Now, if you told me that a company with a $500 billion market cap was able to grow its revenue 42% in a year, I would call you crazy. And I think everybody would have called you crazy, 5 years ago. But people are now slowly realizing how much money you can make off of the digital wave and how little it costs you to do so. So if you look at Facebook's like assets, there's something like, close to $200 billion in assets, and they have less than around like 10 billion in just in liabilities. So, and same proportions are roughly to Google. It's the fact that they're able to make money off of something that they installed, and then they wait for other people to continuously use it, and that only increases the amount of money they get. It's an amazing system, and that's why I love both of these companies. That's another reason why I'm extremely bullish on Facebook. But getting back to it, so if you look at their current assets, so that's like their cash, the net receivables, their short-term investments, bonds, money market, things like that, that they'll just throw their money into to get small returns, so that way it's not just sitting in cash. But they're all extremely liquid, and they can all take the money out. If, say, there was a recession in a week, Facebook can get, 90% of this money instantly. And the lowest and the hardest one to liquidate out of all those would be the net receivables, and that actually has the lowest, coming in at around $6 to $8 billion. So Facebook has a lot of cash on hand that it can just kind of do whatever it wants with. And that comes with no long-term debt. So again, worst case scenario, taking a page from Peter Lynch, always invest in a company that has no debt, because if they have no debt, they can't go bankrupt. So that's one of the main fundamental standpoints, I guess, I have on Facebook, is the fact that they are a cash flow monster, and they have enough cash so that even if, say, they get hit with regulations, they get hit by having to, what they're doing right now with adding on so many jobs to make everything private and more secure, they have enough cash to burn through that and it not really affect their realistic bottom line for a while. Now, you saw the drop because people think that instead of growing, 42%, they're going to be growing at the low 30s to mid 20s percent a year, assuming nothing changes, just the fact that they added on these jobs, they're going to, stunt their growth. And while I think, one, that's kind of ridiculous, thinking that they're not going to increase any of their other margins to begin with, but either way, you're still gaining, you still have a giant corporation that is growing at 20+% a year on the pessimistic side of things, and people justified the stock price because of that. So I personally don't agree with it, but that's the majority of their standpoints. And so now looking at one of the biggest reasons why I am super bullish on Facebook, and why when I saw the Cambridge Analytica scheme and when I saw that this last dip, I've just been buying shares. And that is because right now data is extremely cheap, especially focus data. Now, if you look at focus data, that, like, for example, like running ads on specific people, it's about $8, $9, and you can hit 1,000 people. Now, if you go back like 10 years ago, that turns into like $1 or $2 for the same amount of people, because no one knew that it was a big of an industry. Now, when I would say, maybe 40% of the digital market is done, and like switching into digital advertisements, right now it's about $8 or $9. That allows Facebook and Google to kind of throw up their advertisement costs however they want, and companies still know that it's significantly cheaper per return on investment compared to, say, a television ad, or especially like a billboard ad or a radio ad. Now, to some people, there's still a lot of risk with Facebook. It's grown so much over the past few years. When, there's ever a recession or anything, tech stocks get hammered drastically. And, to me personally, like, depending on the company, like, I'll I'll put my initial investment in, buy here on out. And sometimes with tech companies, they go up ridiculously quick and you just sell your money out quickly. And so a lot of tech investors get looked at as traders. But for a company like Facebook, you can, in my opinion, you could just buy that and sit on it for a decade and not really care. Like I would be shocked if in 10 years from now, Facebook isn't the equivalent of, say, a Microsoft in people's portfolios. Eventually, it'll probably pay a dividend once things stable out. It is going to just continuously generate money as long as it's still still owns platforms that people use. If Oculus takes off, which I personally think, on a side note, that VR will over the years, that's going to just become an extra revenue stream for it, or someone will buy it for a decent sum of money. Like, I don't think Facebook is realistically a risky company. And so now, even if you argue its valuations and like, okay, it needs to get to this certain level for it to be a buying opportunity for me, I understand that. But, a market correction comes, people are afraid it's going to tank, like 40%, just buy more. Again, unless something fundamental changes, the stock price is kind of irrelevant. And with this type of an industry, in my mind, it's just kind of stupid to not throw money at it. But again, not a financial advisor, just, my opinion of everything. And so that's kind of my, my brief gist as to why I think Facebook is a buy and why I bought Facebook. If you guys want, I can go into a full breakdown of Facebook like I did with AMD, and I'll really break down their fundamentals and where I see them going, in the short term, long term, and, where they're going to see like issues arising. But honestly, like this is kind of my just, if you were to ask me like what my opinions are on Facebook, that would just kind of be this. Like, I think it's a great company, makes a lot of money, has a lot of money on hand, and it's kind of in a place where it's so new, people don't know what to do with it as far as regulations go. And the end users don't care about those regulations, at least in the most part. So I think the users are going to continue to use it, which will ensure the fact that it's going to continue to make money in the future. And, its main competition is, partnered with it in a lot of the cases, because Google and Facebook use each other's ads, especially like, you go on Google Chrome, Google can look at your Facebook, you log into Facebook, Google Chrome sees that you log into Facebook, and then Google's like, hey, can I see, or can I buy this specific data packet from you? And then you can get this discounted data packet from me, whether they did while they were on the Google Chrome browser while Facebook was open. Like, it's a very back and forth type of thing. And so I don't see them really having, I feel like they will just become a data duopoly, 10 years from now. Like, so I'm not afraid of direct competition coming at Facebook or Google for that matter, because I think they both kind of know where each other sits. So that's kind of my, my quick ramble on why I think Facebook is definitely a buy and why I personally bought it. Love to hear your, comments and questions down in the comment section below. Did you buy Facebook? Are you sick and tired of people talking about Facebook? Are you still shorting Facebook? Are you just thinking that Facebook's going downhill from here? Let me know. I'll tell you right now, I disagree with you, and it'll be really hard for me to change my perspective on that. But hey, if you truly think that, let me know, and we'll talk about it. Yeah, let me know. This was an asked for video from one of the people that commented on my videos a while ago, and I just never got around to it, and I apologize for that. I'm really trying to revamp this channel. Again, for those of you who don't know, I am a data and tech guy. That's what I've worked in for the past 6 years. I'm getting a degree in finance and in information systems. Yeah, so these are the types of videos that I'm going to be having a lot of on my channel, mainly focused around tech and growing industries and other things that I, from a standpoint, believe that the future generations will always be using or will always have a place, 10 years from now. So I hope you enjoyed the video. Let me know in the comments below. Make sure to like and subscribe. See you in the next one.